Hello everyone. Every trader dreams of making money from the market, but the harsh reality is that 99% end up losing money month after month. Why? They know how to participate in the game, but they've never mastered its fundamental rules. The key question is, do you want to remain a trader who repeatedly gets trapped in cycles of losses? Or do you want to adopt the right principles and cruise straight into consistent profits? Today, we're diving into a powerful book that views trading not merely as a way to earn money, but as the art and science of decision-making. The book is The Laws of Trading by Agustin Lebron. From it, we've distilled 10 essential laws that, if truly absorbed, will transform how you see trading, like a CEO overseeing their empire. A word of caution, don't skip parts of this explanation, or you might miss the insight you came for. Each law builds on the previous one. Skipping the first makes the second harder to grasp, and jumping ahead could cause you to miss the ultimate revelation at the end. So, settle in comfortably. This is a masterclass where the market itself is the teacher. Law 1. Your decisions define your trades. Agustin Lebron's first law states, everything a trader does stems from their decisions. It sounds obvious, but this single idea encapsulates all of trading. Every profit, loss, or struggle originates not from the market, but from your own choices. Imagine opening your charts in the morning, setting up indicators. Everything looks ideal, and your system signals buy. Yet an inner voice whispers, you lost big yesterday, play it safe today. You hesitate and skip the trade. Then the market surges upward, leaving you frustrated. The chart wasn't wrong, nor were the indicators. Your decision was. Lebron emphasizes that the market isn't the real adversary, it's your own mind. Everyone sees the same charts and news, but success depends on the decisions you make with that information. Weak decision-making renders indicators, strategies, and tutorials useless. Losses pile up regardless. It's like owning a Ferrari but only knowing reverse gear. Expensive, yet destined for crashes. This law reminds us that decision-making is the core of trading. Your thoughts trigger clicks, and those clicks shape your account's future. No excuses, no blaming others. Just you and your choices. Law 2. Logic over mood. The second law asks, is your trade based on logic or your current mood? It seems straightforward, but 90% of traders operate on mood, then blame the market for betraying them. Picture this, scrolling Twitter over morning tea, you see a tip, Reliance heading to 5,000. Excited, you buy immediately. By evening, the stock is down, and you curse the market. But it wasn't the market, it was your impulsive mood. Every trade is a bet, like in poker, but against the entire market rather than one opponent. The key question before every entry, is this driven by my strategy or my emotions? Failing to ask this turns you into a gambler, and gamblers always lose to the house, the market. Emotions and logic constantly clash. The mind sees a solid chart, but the heart recalls yesterday's loss and urges caution. A single emotional impulse can wipe out months of gains. Always scrutinize bets with logic, not fleeting feelings. Law 3. Build and test a genuine edge. Logic requires a measurable, repeatable edge, an advantage that improves your odds over others. Without it, you're just chasing hope. Consider Rahul, who noticed stocks rising 2% in the first half hour often gained another 1.5%. He bought daily at that time. Initial success, then slippage, news events, and losses erased everything. Why? He had an observation, not a tested edge. A true edge is like a precise recipe, exact steps, quantities, and consistent results. It includes statistical elements, win rate, average win or loss, expectancy, and operational ones, execution, slippage, sizing, timing. Backtest historically, then forward test live on small scales to avoid biases. Without an edge, traders chase tips and crowd sentiment, becoming public mood investors who consistently lose. Trading is engineering, not poetry. Repeatability is everything. Protect your edge with discipline, appropriate sizing during drawdowns, avoiding greed in wins, and patience through temporary failures. Law 4. Risk management keeps you alive. If you can't manage risk, you won't survive long. Risk management is trading's oxygen. A novice builds an edge, wins big early trades, gets overconfident, and risks everything on the next, only for the market to wipe them out. Winning trades is secondary. Surviving to trade another day is primary. Think of it as a game with 100 lives. Smart play lasts long and profits. All-in bets end quickly. Define position sizes, honor stop losses, and treat each trade as a small experiment. Greed escalates risk, turning trading into a brakeless vehicle headed for crash. Trading is a marathon, not a sprint. Control speed and endurance to finish strong. Law 5. Emotions are your greatest enemy. Even perfect risk rules crumble under emotions. Fear, greed, overconfidence. You set a 2% risk limit, but when stop loss nears, fear whispers, wait, it might reverse, turning 2% into 10%. Or after wins, overconfidence doubles positions, handing profits back. The shield? Strict written rules, journals, predefined exits. Follow the system mechanically, no matter the mental noise. Law 6. Adapt to the market's changes. Markets evolve, trending, sideways, volatile. A rigid system fails eventually. Your setup is like a ship. Flexible sails and direction changes navigate any weather. Evergreen strategies don't exist. An evergreen mindset, open to adaptation, does. Distinguish real regime shifts from noise using data and probability. Law 7. Embrace probabilistic thinking. Every trade is probability, never certainty. A 70% win rate strategy still has 30 losses in 100 trades, possibly clustered. Expecting every trade to win leads to abandoning systems prematurely. View trades as biased coin tosses. Individual outcomes uncertain, but long series edge positive. Play the series patiently, avoiding gambler's fallacy. Law 8. Risk-reward ratio trumps win rate. High win rates mean nothing without favorable risk-reward. A 90% win strategy giving small gains, but huge losses drains accounts. A 40% win strategy with big winners and small losers builds wealth. Win big when right, lose small when wrong. Like a business where jackpot deals cover everything. Law 9. Discipline outpowers knowledge. Knowledge alone doesn't profit. Disciplined execution does. You know rules, yet break them under pressure. Discipline bridges theory to results via habits, checklists, journals, consistent repetition. Boring consistency yields extraordinary outcomes. Overconfidence after wins is the biggest threat. Stay humble. Law 10. Self-awareness is the ultimate edge. Trading is an internal battle, you versus your mind. The market mirrors your greed, fear, patience, impulses. Neutral and indifferent, it reflects what you bring. Post-trade reviews build honesty. Why this entry? Impulse or plan? Why widen loss or cut profit early? Master yourself first. Emotions, triggers, weaknesses, then the market follows. These 10 laws form a complete framework. Knowing them isn't enough. Living them transforms trading from gambling to a sustainable profession. The market waits for no one, but disciplined application can turn it into your goldmine. Which law resonated most with you? Implement it starting today. The real game begins now. Brother, please become part of this journey by subscribing and write in the comments which formula felt the deepest to you. And yes, share it, because perhaps because of you, another trader can change their life. Remember, knowledge doesn't work wonders alone. When it spreads, the world changes.